We're here today to talk about the launch of the next stage of our strategy. 5 years ago, we launched Quickening the Pace, and we said at the time to our shareholders that we would review it at the end of 2017 to see whether it had been successful and where we met the key performance indicators that we had set out at that time. And I'm pleased to say that we have met those, been very successful, and therefore we're launching the next stage of our strategy, Quickening the Pace 2.
So we've grown the business significantly over the last 5 years. We now run over 150 events in 17 countries. Our portfolio is spread over the US and China as 2/3 of the business, which are our fast growth territories. So overall, we've got a bigger business and a really good spread. 2017 was a landmark year for Tarsus, and we looked to measure our Quickening the Pace strategy delivery. When we set the strategy out in 2013, we talked about driving growth and delivering accelerated returns to shareholders. And the growth really has 3 pillars: organic growth, replications and acquisitions. And we look to track success against each. Our revenues have grown 9% on average each year. Our buyer growth has also grown 8% on average each year. We've worked hard on replications, launching over 50 events, and we've completed 13 acquisitions in that time frame. In each of the pillars, we've been really successful. And that has driven our earnings growth at a compound rate of 9% a year, with the main driver of this being organic growth in the business. And this has allowed us to increase our dividends at an average of 9% a year, so you can see that our Quickening the Pace strategy has really delivered for us.
We've launched the new phase of the strategy, Quickening the Pace 2, and it's really important that people understand this is about evolution, not revolution. So we've been very careful in keeping quickening the pace, and 2, to signal that actually it's a continuation. Why? The business has actually moved on in 5 years. We're now 1.5 times bigger. So it's an adjustment of what we're doing, not a fundamental change. In terms of the specific elements of the next stage of the strategy, we're continuing to focus on the 3 pillars of Quickening the Pace, which is organic growth, replications, and M&A. But in addition, we're adding 4 new areas of increased emphasis. Firstly, scale, and that is scaling at the event side, getting our businesses bigger. If we can show our customers that they're getting a better return on investment from our exhibitions, we'll get a greater share of their budgets. Secondly, 18 months ago, we launched a best practice initiative within the group, which we're going to continue to accelerate in terms of our sales, our marketing, and our operations. Thirdly, in terms of geographical focus, 2/3 of our business comes from the 2 biggest exhibition markets, US and China, and we will continue to deepen in those 2 key geographies. And finally, in terms of M&A, we'll continue to do the bolt-ons that we've done, but we will look to introduce new platforms like we did a year ago with Connect, which will give us the next phase of organic growth and replications. In terms of measuring performance of the strategy, Quickening the Pace delivered 111% total shareholder return, and we're going to continue to use the same metrics of how we're measuring the returns to our shareholders, and there's 3 of those. Firstly, organic revenue growth, and our target is between 5 and 10% per annum. It's buyer growth, the attendance at our exhibitions, of between 5 and 10%. And finally, earnings per share growth of between 5 and 10%. And with the scale and momentum when we get into the business, we are very hopeful that that's going to deliver continuing strong market outperformance returns to our shareholders.